Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. U.S. beef production from the fed cattle supply is currently running 1% below year-ago levels. That is roughly 3.5 million less pounds of beef being produced each week. Fed cattle carcass weights have been 15 pounds heavier in the first quarter 2013, so the production declines are mostly due to reduced fed cattle slaughter. However, the fed cattle supply in terms of USDA quality grade has changed the available mix of product in the beef complex. USDA choice production closely resembles the year-to-date beef production, with supplies down 1.2%. The differences are more noticeable as you look at the premium choice and higher production compared to lower choice and select grading beef. USDA prime and upper two-thirds choice beef production is currently up 8.5%. leading to an additional 6.6 million pounds per week. Lower one-third choice and select grading beef is currently running 4.1% below 2012. That equates to a 12 million pound per week decline. Focus on select grade beef and the production differences are more noticeable. In 2012, there was only 1 week where production was below 100 million pounds. Through first quarter 2013, there have been 9 consecutive weeks of production below this threshold. Uncurrentness in feed yard marketings created larger supplies of premium choice and higher quality grade beef that will likely continue through the spring and early summer. That creates a supply dynamic that could work against a widening choice select spread in the short term. Without a significant increase in year-over-year demand, the tighter select supplies relative to choice may keep the summer spread highs below year-ago levels. Trade volumes in the fed cattle market were relatively light at recording time. Current prices at recording are $1 per hundredweight lower compared to last week. Sales in Texas occurred at $126 per hundredweight, while the North live trade was noted at $126 live and $200 to $202 dressed. Feeder cattle values were $3 to $8 per hundredweight softer this week, while calves were mostly $5 to $10 lower around the country, depending on regional moisture conditions. The volume of offerings remains above year-ago levels so far. Slaughter cows were $2 to $3 per hundredweight lower as well, and the box beef market was mostly sideways this week, as the spot market interest remained relatively soft, while interest for late spring deliveries seemed to increase. Corn prices firmed throughout the week as wet and cold conditions throughout the Corn Belt delayed planting activity. The USDA released its monthly cattle on feed report this afternoon. April 1st feedlot inventories were reported at 95% of a year ago, while trade estimates averaged 94%. March placements were at 106%, and industry expectations were at 99%, while March marketings came in at 92%, with analyst forecasts averaging 93.5%. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than equipped with the industry's most powerful database, our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor. 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information.